This is Dyer from Divergence Analysis. Today we're looking at a Dow futures contract. We rolled over to the September contract. This is June 17th and we're looking at the morning session a little bit after the open, and I wanted to focus on the particular down move that we see right around 10:15 a.m. Eastern Time today. We get a nice confirmed down signal. We get red histogram bars on the short-term trend showing that we're into a bearish cycle. We have red price bars meaning that the selling pressure is dominant. We start closing below the pivot line, this gray dotted line, meaning it's turning the trend down. We get a velocity signal to the downside. The red arrow coincides with the green algorithm line crossing below the blue baseline. So all of these things tell us that this is a short entry. It takes a little while to develop, but we maintain the negative stance with the short-term trend. It's very important to stay with that short-term trend. You maintain the red price bars, meaning that selling pressure is dominant, so it takes a little while to develop. But I wanted to show you a unique feature of the three lines you see here: the gray dotted line, the light blue line, and the red line. When those three lines eventually cross, it's not going to be an entry signal, but it's a confirmed signal that you're now into a sell cycle. After the cross, when you see the lines move, especially the red and the blue lines, move away from each other hard in a divergent direction, red line up, blue line down, that's showing you more force and kind of a re-entry. In this case we're already short, but this is showing you that more force is picking up right at that point. So 15 minutes later we're seeing a lot more force come in right at 10:32, and we get a nice downside hit after that. You see a little bit of consolidation here. We don't get a buy signal. There's no green arrow, there's no confirmation with the blue leading line going above zero, there's no cross of the red and blue lines here, but this is showing you some consolidation. So if you do get out, another point of re-entry is as soon as we see the red price bar come back in, meaning that selling pressure is dominant again, and these lines once again, rather than converging, the red line pushes back up, the blue line continues down, and this is another really nice re-entry signal that you see here, which ends up in another 20 points or so, I believe. So this is how you can view and help manage your trades using the stop line and the blue trend line that you see here. When they're moving apart from each other, it shows another surge to the cycle that it's currently in. When they're converging, as you see here, and at the beginning of the day when they converged, those are showing you that you're entering a new cycle. So you see here again in this long buy cycle to start the day, when the red line pushes back down away from the blue line, we get another nice hit to the upside. That's how you can use the light blue line, gray dotted line, and red lines in the buying selling pressure indicator on top of the price bars here to help manage your trades.